Welcome back. Let's talk about how markets really work. The first rule: markets exist to liquidate the unprepared. Take this so-called support level. Retail traders flock here, convinced it's a bargain. But institutions? They're drooling over the trap they've set. Watch closely as price spikes below support, triggering panic stops, then reverses sharply. That's not a trend. It's a calculated ambush. Your move? Fade the fake breakout. Enter here, where price snaps back, leaving shaken-out traders in the dust. By the way, if you want to deep dive into these liquidity traps, our last video breaks down exactly how to spot them. It'll transform how you read charts. Now, let's talk about fair value gaps, the market's unfinished business. This gap isn't a glitch. It's a gravitational pull, a vacuum price will return to. But here's the twist. If price fills the gap and closes beyond it, that's your signal to act. I'll show you how in 60 seconds. Let's break down fair value gaps in 60 seconds flat. Ready? Look for 3 candles. A strong move up or down leaves a gap. No overlap between the first and third candle. This is your FVG. It's the market's unfinished business. Draw a box from the high of the first candle to the low of the third. This is your FVG gravity zone. Price will revisit it. When price drifts back, watch closely. Does it fill the gap? Maybe. But the killer signal? A close outside the zone. On this chart, price filled the FVG, then closed below. That's your bearish trigger. Short at the close. Stop loss? Just above the FVG zone. Take profit. Aim for the next liquidity pool. Quick note. Rewatch our FVG deep dive if this feels rushed. We dissected these like a Swiss watch. That's it. FVGs aren't magic, they're mechanics. Now, go hunt gaps. Next, patience is your secret weapon. Last week, I waited 14 grueling hours for the setup. The result? A clean 5-to-1 risk-reward payoff. Sounds boring? Maybe, but my portfolio is never bored. Now, let's pull back the curtain on the dark pool strategy. Big money hides orders in dark pools. Off-exchange trades invisible to retail, but their footprints, you can see them. Here's how. Step 1. Spot the liquidity void. Zones where volume evaporates. Step 2. Find the institutional order block. Look for that explosive candle where price ripped through resistance. Step 3. Wait for the mitigation sweep. Price dips below, scoops up stops, then rockets up. Boom. Institutions just handed you a free ride. Set your take profit at the next liquidity pool and let their algorithms fuel your gains. That's the difference between gambling and playing chess. Your new morning ritual? The 1-hour sniper routine. Spend 10 minutes, not 10 hours. Daily chart. Is the trend your friend? Draw the line. For hour chart. Where's the liquidity? Mark the extremes. 1-hour chart. Hunt for unmitigated FVG. Those gaps price hasn't revisited. Take this bearish FVG. Price filled it, then plummeted 2%. Your entry? Right here. Stop loss? Tighter than a Wall Street bonus. Risk reward? A crisp 1-to-3. That's how you trade like a pro. Ready for a challenge? Find one unmitigated FVG on your charts right now. Look, I can't promise lumbos, but if you apply this, you'll stop being the prey. Smash that like button. It fuels this channel. Subscribe and hit the bell. Until next time, trade less, profit more.